All right, good afternoon, everyone. Greetings and welcome to the December 5th, 2023 meeting of the Mecklenburg County Economic Development Committee. I'm Commissioner Susan Rodriguez McDowell, and I have the pleasure of serving as chair of this committee. First of all, because we do have folks, do we have folks participating remotely? Just staff. Okay. Well, we're still going to read our little spiel in case others join. We welcome the public who have been provided with a call-in number to access this meeting. The agenda was sent out to those already on the distribution list. If anyone would like electronic copies of any presentation materials today, please make these requests via email to Megan Witt. Her email address is megan.witt@mecnc.gov. So we will begin today's meeting by introducing those of us here in the room at the Government Center, and then we will do staff. We'll start out with the commissioners. And I'll start to my right.
Mark Jarrell, District 4.
All right, thank you.
Laura Meyer, District 5.
All right, and as I said, Commissioner Altman will be up shortly. And let's go and do our staff introductions.
Roger Johnson, Economic Development.
Shahid Rana, Economic Development.
Maybe you could speak slowly.
Keisha Whitley, Economic Development.
Perfect.
Megan Witt, Economic Development.
Clay Andrews, Economic Development.
Agustin Velasquez, Economic Development.
Good afternoon, Leslie Johnson, Economic Development.
Hi, I'm Michael Simmons. I'm the county economist.
John Walton, Economic Development.
Excellent. And I can see we have Timothy Tibbs virtually. Do you want to introduce anyone else who's virtual with us?
Yep, and online with Economic Development, we have Fred Atimo and Monica Greer, Britt Clampett with Public Information, and Timothy Tibbs with County Manager's Office.
And the timing could not be more perfect. The last person that we're going to have introduce themselves is perfect timing.
Thank you. Lee Altman, County Commissioner serving at large.
All right, excellent. All right. Let's see here. First of all, we want to entertain a motion to approve our minutes from October 3rd.
So moved.
Second. Wait, no, whoops. Was it November 8th or October 3rd? My little script here has two different dates.
Oh, November 8th.
It's November 8th. Okay, sorry. I was like not looking through all these papers. All right, so did I hear a motion?
Yes.
Okay, did I hear a second?
Second.
Anyone? I did? Okay.
Second.
It was you? Okay. So the motion is made by Commissioner Meyer, seconded by Commissioner Altman. All those in favor say aye.
Aye.
And the minutes are hereby approved. So I will now recognize Deputy County Manager Leslie Johnson to introduce the next agenda items.
Good afternoon again. We have before you today a two-part overview. One is the REMI presentation. So as you know, we use an economic modeling tool to help inform us when we're making various decisions as it relates to tax increment and alike. And so what we've decided to do is to do a two-part of this presentation. And one will be Roger Johnson, the director, will provide an overview with regards to why we even think about using REMI as it relates to the importance of economic development as a metrics. Like, how do you ensure that when you're doing good economic development strategies and decision-making, what are the types of tools that you need to be looking at and how REMI feeds into that tool? Then from there, we're graciously pleased to have Brandon with us today. And Brandon will be providing us an update on really refreshers for those who may have had more familiarity before, but also I know there was a request from Commissioner Altman at one point in time to try to get a better understanding and deep dive, because REMI predates when we started using this tool. We used this a long time ago, and some of that more informed information that we may have shared with the board to understand the importance of the tool happened a long time ago. And so we felt like it was an opportunity based on some additional inquiries to share that with you today. And then, of course, we'll transition to closed session after this presentation. With that, Roger,
Thank you, Dr. Johnson, Madam Chair, members of the committee. Roger Johnson, Economic Development Director. Before Brandon gets into the details of how REMI works, I'm going to contextualize this comment by showing a short video. It will give you the grace of 3 minutes about the flow of money. And in gross oversimplification, REMI is a software tool that predicts the future value of projects and the flow of money. And I wanted to show a short video that kind of talks about the flow of money. I recognize that many of you may already know this information, but if you will give me the grace to put it in context, we'll show this short video. I'll be happy to answer any questions about that and then turn it over to Brandon to get into more details about how REMI actually does measure this flow. So if you would, please.
Yep. 1 second, Madam Chair, I wanted to acknowledge Commissioner Meyer,
What does it stand for?
REMI,
Regional
Economic Modeling Incorporated.
Inc.
So they're getting Regional Economic Modeling.
Modeling
Are
Incorporated.
y'all making that up or that is? Are you? I know y'all are all like, yeah, but you could.
Sounds right. That sounds good.
Okay.
Listen, lesson learned. We should not have used acronyms there. I should have mentioned that.
I just have.
Okay, and then the other thing is that when Brandon introduced himself, he introduced himself as Michael. And I was like, oh my gosh, I thought that was Brandon. And so I was like, oh no. So do you prefer Michael or do you prefer Brandon?
No, I prefer Brandon, but,
We've been calling you Brandon for 5 years.
Yeah. Did it freak you out when he said Michael? I was like, I sworn that was Brandon. Okay, so
Brandon
you
Michael.
little schizophrenia happening here for all of us.
How about
Okay.
Michael, Brandon, Michael?
Okay.
We'll figure that out.
Okay, all right, no worries. We'll let you off the hook there.
Let's talk about the flow of money and how it impacts your local economy. A local economy is a simple geographic area where the vast majority of the people live and work. The boundary of this local economy is mainly determined by the commuting patterns of the people in the area. The location and number of jobs within an area determine how big geographically this economy will be. Now, imagine all of the wealth of this local economy is contained in a single bucket. It swirls around and around like it's being churned with a mixer. It goes from person to person, business to business, and person to business. Money is exchanged in each transaction, and the money recycles through over and over. But there's a hole in this bucket where the wealth of the community is leaking out. Did you buy a car last year? While some of that money does remain local, a good share of the purchase price is returned to Detroit or wherever the car was made. Every time you purchase a shirt or a pair of shoes, money leaves the community and goes to the city where the product was made or the service is being performed. No matter how big or small, money is continuously leaving the community through this hole in the bucket. Now you may be asking yourself, but I thought money was being exchanged from business to business. Wouldn't that stop the leak? Unfortunately, it doesn't. Most businesses are consumptive in nature, meaning they rely upon the local marketplace to earn their profits. Consumptive businesses include doctors, restaurants, and movie theaters. Almost 95% of the businesses in most communities are consumptive businesses. If they want to increase their share of the money in the bucket, they need money to stay in the bucket and grow. So, how do you stop the leak? Well, you can't stop it entirely. Instead, what a community needs is to add money to its economic bucket, replenishing the supply. A source, like a faucet at the top of the bucket, needs to be turned on, rejuvenating the wealth so that the churning process can continue. A local economy's faucet is a specific type of business known as a primary business. New wealth is brought to a community by the business activity of these primary businesses located within your local economy. A primary business is one that sells its goods or services outside of the area, importing money to the local area. That car you bought last year, the primary business in that transaction is the factory it was manufactured in. The bottle of wine you picked up for dinner, the primary business in that transaction is the vineyard where the grapes were grown and the wine was bottled. When communities are able to find a healthy balance between consumptive and primary businesses, the faucet can fill the bucket faster than the money can leak out. As a result, the local economy is stabilized and new wealth is created. The retail sector can expand and add new boutiques and new restaurants. The service sector grows and adds businesses like art galleries, yoga studios, and salons. A balanced, stable economy is the goal of all economic development institutions. And just like that, you've learned a little bit about economic development and the flow of money in a local economy.
So we share
Let's
that.
talk about the flow of money and how it impacts.
We share it twice. We share that information just to contextualize the point that the REMI model is going to measure the flow of money through our economy. We in particular deal with primary businesses that not the consumptive businesses in our business attraction and retention portion. So when we do economic modeling, what we're telling you is, okay, how much dollars is coming in our community and how many new businesses are going to benefit from that and who are they likely to be, who is likely to benefit from those. So with that being said, I'll turn it over to Michael to talk about how that software works, the inputs, the outputs, and what you receive on the other end.
All right, so if I just match this, will it go to the slides? All right. So while she's doing that, what we're going to be talking about today is the REMI PI Plus model. Within REMI, there's about 5 or 6 different models, and the way they would describe the PI Plus model is their flagship model, which is a fancy way of saying it. It's their most basic one. There's a Transite model, which measures, which adds on and it shows transportation networks. There's a Tax PI Plus model that is used more by larger government institutions. And that one accounts for revenues and expenditures and such, kind of bottom line, but it's very expensive. And you're going to find out that what we do on the back end here is we've basically recreated that model using the existing product. There's a Metro PI. I don't know what that one does. There's an E3 model, which is more for environmental studies. So, like I said, but today we're talking about the is down or okay. All right. We're going to be talking about the PI Plus model. So I'm going to give you a brief overview, and then we're going to talk about some examples within the model. And I've clicked the wrong way. I'll figure this out. Okay, so the PI Plus model specializes in generating a realistic year-by-year estimate of total state, local, and federal effects of a specific policy variable or initiative. We use a two-area model. You have us, Mecklenburg County, and then we have these 15 surrounding counties that make up our second geographic area within the model. What this allows us to do is if we program an effect into Mecklenburg County, we can measure the effect on the MSA. If there's something that changes within the MSA, we can look at that and see how it affects the county. This came about, and I came about 8 years ago whenever we first got this model to help run it. At the time, we were working more with the Charlotte Chamber at the time. They were doing a lot of studies and they wanted to measure things at an MSA level. So we adopted this MSA outlook here to not only measure our own stuff, but to help them out as well on a larger front, looking at the effects on the MSA. The model is used by government agencies, includes most U.S. State governments, consulting firms, nonprofits, universities, and public utilities. Articles about the findings and the equations have been published in professional national journals. This includes the American Economic Review, Review of Economic Statistics, Journal of Regional Science, and the International Regional Science Review. So it's a very widely accepted model, and I think it's the best one out there in terms of all the economic impact models that are on the market. I seem to have went too far. I am very not good at this. Okay, major studies involving REMI. This shows various ones. Some of these was done with the PI Plus model, and those would be like the North Carolina Medicare expansion study that was done with REMI. The impact of establishing Amazon's HQ2 up north. we actually did the same, I actually modeled the same headquarters for coming here as well. There was in Chicago, they produced a major study for the expansion of the O'Hare International. So a lot of different things, a lot of wide uses and very published model. So this is kind of the brains of the model. On that right-hand side there, it's an input-output model. And this is where you adjust a variable within the model, such as employment, and the model then computes a general equilibrium to basically solve for that. The economic components influence are influenced by other variables within the model. And then similarly, industries act as producers of final goods for consumers and intermediate goods for other producers. So if we took, take one of those blocks there on the bottom left, one up, you got economic opportunity. That's one that we change within the model. As we do that, you'll see that there's a yellow arrow, it goes up, and I got a laser. Yeah, so it goes, it affects migration to the area. Migration affects the population, affects the labor force, and increases economic opportunities elsewhere. At the same time, the population increase adjusts state and local government spending, which influences the output and the consumption, which goes into how much income people have. All these things are being changed when we change these single variables within the model. And so some of the linkages here. This is an example of a paper mill production. So within the model, it calculates these production chains for each industry. So as we add a business, it'll calculate what is here versus what is needed to be purchased outside of the area. So let's say that we were that we got this craft pulp mill right here. Primary wood processing is one of the big inputs for that. We're within the county, we don't have a forest, I don't think we really have almost any forestry services. So that would be an input that needs to come in from elsewhere, and it's going to measure those changes. And if we get businesses that have a lot of linkages to it, the effects are going to be bigger than those that they don't have a supply chain to basically serve them already. So whenever we start these forecasts, what we do is we first generate this baseline forecast. And this uses CBO estimates, trend modeling, and other sources such as the census, BEA, Labor Department. All that bakes in factors to make this baseline forecast. Then we go into that back to that brain center of RMI. We change a few variables that we want to model. So when we're doing BIP grants, I will show you some of the variables that we change here in a minute. But once we do that, we're going to generate a simulation of the new economy with these changes in there. And we measure this deviation, and that's what that final product is that we show you in the PowerPoints. So this is going to be an example, kind of a standard generic BIP project. These require the following adjustments to add in a new business. These are the minimum requirements. Now, more complex businesses have more inputs to capture the effects. In no specific order, we're going to add in the employment, and we're going to do this at the 3-digit NAICS level, which is North American Industry Classification System. And that assigns those employees to that specific industry. The next thing we do is we adjust the wage. Within the model, there's a compensation rate that on average that these employees get that work in the specific industry. So let's say the business that's coming here is going to pay their workers $60,000 a year. Well, the model might say, okay, well, that industry, 50,000 is what we're showing as average. So what we do is for every person, we add an additional $10,000 to the compensation in that industry. To correct for that effect, we add in the real property. This can be, commercial, manufacturing, residential, whatever it is, we add that in, and it also cues up the need for construction what's inside the county to build that asset. And that's why anytime that you look at the REMI outputs, you'll always see that first year bump, and then it settles down and it does whatever else it's going to do from there. Next, we add in the personal property. This is the investment that's needed to basically make the company run. So back to the paper mill example, it could be presses, things like that. Whereas an office space or something like a fintech company would need computers and such. We put those in there into the model as well. And then,
Brandon, before you go on, can I just give an example that, like, when you look at the employment by job type, you will see, and I know we don't go into this detail with you, but I think it's relevant to talk about that. Like, you will see the president of the company may make $150,000 a year, and a warehouse laborer may make $60,000. Well, in that model, it will assume that the president of the company may buy jewelry, or they may buy something different with their expenditures compared to someone who makes $60,000 a year. So it impacts different businesses in our community based off of the income level. It gets that level of granularity. So when he talks about entering the NAICS codes and so forth, we don't share that level of detail with you, but it is that sophisticated to measure, okay, so, this type of car is more likely to be bought in your community if they have this level of income as opposed to a different type of car. So it does that level of predictive analysis for you. You kind of just see it in aggregate, but if you ever want to see those details, it can provide that to you. Thank you.
And then we push the magic button, it runs the math into the model, and it gives us these results. This is what the result tables look like. And like I said, it doesn't seem like, it's very helpful at first, but what this is a custom table that I've built. And what it does is it looks at 75 different categories of personal consumption. And it multiplies it with what we call the regional purchase coefficients. Now, on his video, it showed that, like, okay, you buy a car, with some of the money is going to go back to Detroit and things like that. So then these 75 items, I don't know if you can barely see it there on that first column. You see furniture and glassware, jewelry, musical items, sporting equipments, all that stuff is in there. And it's multiplied against these regional purchase coefficients to measure that, how much of that leaves and how much of that stays here. So an example of something that has a very high RPC, where like whatever we build here or produce here is basically returned, would be construction. Think of that. You don't typically bring in someone from outside. It's got to be done within the area to build it. Whereas if we're talking about something like fuel, gasoline, things like that, those are coming from your shell states down Texas and Louisiana, places like that. It's got the refining capability. So it gives us a spend then. And what we're going to do with this spend is I take these categories and I multiply it by their applicable sales tax rate. Now, sales tax rates vary depending on what the items is. General merchandise, is taxed at the base rate, whereas like items such as food and stuff, maybe like 2%. Some items a little bit more, such as like cigarettes and things like that. So all that's measured, and that becomes basically the main roll-up of sales tax. And then we're also measuring a change in residential capital stock, and we apply the basically value of a penny to that to work out property tax rates and the changes to our property tax. And like I said, this measures both the indirect effects, which are the business to business activities, and then the induced effects, which are those that's created by basically the increased income changes. So, let's say, you're a business, you're gonna buy certain goods, and you're gonna pay your workers. Your workers are gonna go out, they're gonna spend money on things, and then those businesses will also have to replenish their stock. Maybe they buy themselves something nice as well. So we're measuring all those effects, the direct, the indirect, the induced, and we're kind of giving you a combined number whenever we're making these scenarios here. And then we put it together and we present it in these nice boiled down little graphs here that I'm sure you're familiar with. And yeah, we most of these are done through Excel then on the back end. Like I said, we use Remy for the math, and then we'll clean it up with Excel and make it pretty. So that is I'll have basically Remy software tool that enables us to predict the impact of policy and project decisions, but it's heavily reliant on the inputs to the model, the whole garbage in, garbage out. So, but we've developed the unique means to tailor the model's output to show the effects on our revenues. We've been nationally recognized, winning the 2022 NACO Best in Category Award for financial management through, for this model. So,
Mecklenburg County?
yeah,
Amazing.
yeah, thank you. So, yeah, that's it. Any questions?
Well, for questions, I want to start with Commissioner Altman, since I know you had an interest originally that kind of brought this item to us.
Well, when I go buy a car, I don't know anything about cars. So when I go buy a car, I update my Consumer Reports subscription and let the people who have an expertise in, analyzing the latest and greatest can recommend to me what's good. Even though I really love my Honda, maybe Honda isn't the best thing anymore. So do you, and I'm sure you do since, of your background, but are you following trade journals and what is, the other modeling that may be out there that other municipalities our size are using? How do you compare and contrast other products on the market? Why is this the best one? When's the last time you really looked at other ones?
So the only other real competitor to Remy is InPlan. InPlan, it tends to be more of a black box in how it shows the data. Also, there's been a lot of studies that's compared the two. I've read through those. Can't recall exactly what the differences are, but the one thing that did stand out was, whereas InPlan used more generalized assumptions and such, Remy does additional surveys, local area type of data to further tailor the data to make it more specific to our area. Now, back whenever we were working with the chamber, they were using InPlan. So we would often run scenarios by each other. They would do theirs, we would do ours. And, in the end, we decided that if anything comes in Mecklenburg, we're going to measure it with the Remy model because it seems to be better.
So do you know our other municipality? Is this the one that everyone's using?
This one
That are our size or bigger,
Well, I think we're actually one of the smaller locations that's actually using this. Most of the areas that are using this model are large government agencies. State of Alaska, for example, they use it. Michigan is heavily reliant on it. I know I've worked with some people out in South Carolina. There's a professor down there in Clemson. He does a lot of their studies for their economic analysis policies. Yeah, it seems that the bigger studies typically will go with Remy versus M-Plan. And that's also why you had New York, doing theirs with Amazon HQ2. And then at the time there was, I keep in close contact with the guys at Remy because they also do give guidance and such as well on a lot of these modeling projects, and a lot of government agencies was coming to them at the time for that.
So what I'm hearing from you is you feel confident that we're using the best tool out there.
Oh, absolutely.
Okay. And then after the fact, I think a lot about the Pearl and the representations that we received and that then I turned around and made to the community. I hope that those representations turn out to be accurate because I take this very, very seriously. And so one thing I would like to know is what have we done here, or what studies may have been done to see if Remy's predictions were borne out after the fact. We can't know yet because for example, the Pearl is just the beginning, but this has been around for some number of years here and elsewhere. And I would expect that analysis would have been done by some enterprising PhD economist looking to, write their dissertation. Has that been done, and what has been found?
I will have to check with the guys at Remy to see if I know they've done it, but I have not. I can't recall anything off the top of my head at the moment.
Thank you. I would like that follow-up.
Okay.
Can I just jump in on your question to just clarify? Basically, that was one of my questions too, and I'm not sure if I was getting exactly what you were saying, but are you questioning, how do we know this is accurate? Like,
How do we check our work after the fact?
yeah, because you're mentioning the Pearl, but we have things that go back much further that, we could actually know if or can we actually know if the impacts that we expected actually came true. And that's kind of, I think, what we all wonder when we see these models.
How far does it go back?
Go back, it's really a go forward model instead of a go back.
No, how far back have we been using it? 2014? Oh, you said that when you started 8 years ago.
About 8 years
Okay.
ago, yep.
2014.
So you can go back and analyze what was.
There's problems with doing that. First of all, the companies that we bring here are they're private companies. So you would need a very large scale study because you would need to know not only everything that business is doing and spending to measure those direct effects. You would need to know what after it goes from them, what all these other businesses are doing. And then you got to know, well, how much of that income was additional income that someone received because of those businesses, and then what did they do with it? So it's almost too tangled up at that time to really trace back anything directly to the model, but it does use the most up-to-date I guess, I wouldn't say theoretical, but the equations, the calculations, formulations and such that most accurately do measure these effects. I did bring an entire book of the equations and such in there, and you'll see that they're all the things that are kind of taught, and our full understanding of economics is pretty much baked into this model through this web of mathematical calculations.
Well, what I would say is, I understand if we don't have the bandwidth here in Mecklenburg County, and I understand why it's so complicated, but surely if this is being used by the state of Alaska and very large places, which I'm sure has involved at this point billions of dollars, there's got to have been some enterprising academic who's tried to isolate the factors and evaluate it. I mean, I just would like the literature to have to be looked at.
Let us just explore. We can't speak in this moment, if it exists or doesn't exist. So let's just receive it and then let's see if we can explore and see if we find out any additional information.
I'm done. Thank you.
All right, great. Commissioner, oh, did you?
Could I
want-
add,
Sure.
so one thing that we were able to measure with this was at the COVID recession. I ran a forecast on what would happen and I basically, assumed, I can't remember exactly all the variables I assumed, but it was like that, that tourism and such would drop by X percentage, that this would drop by this. And we calculated that, I calculated that up, ran it through the model, and it basically showed that, through COVID, that we would take a sharp, small hit on sales tax, and then it would basically, kind of disappear from there. And we'd be much better off. That was one thing that we did that, I was able to kind of look at. And then just kind of, I guess, let it be coincidentally or whatever, when Ballantine did their Reimagine Ballantine project, they had hired big, large name outside consulting company. And my estimates and their estimates were pretty much spot on from one another.
Interesting. Okay, Commissioner Meyer?
Thank you. This is fascinating to me. This is in effect AI, isn't it?
I consider it kind of a fancy calculator.
Which is basically, I listened to a speaker, and from everything that I heard, AI is basically a predictor in everything. And so this is a predictor.
Yeah.
So even though it's software, I guess AI is software in effect anyway, right? Can be.
Well, the difference I think is, AI can make its own assumptions and such and help generate some of these thought processes. This cannot. This is, you add some employment in, you add this effect. It's using all these tables and these known equations and stuff to adjust all those other parameters and basically solve a large general equilibrium type of regression in a way.
Can I make a comment?
Mhm.
It is not really AI. It's almost like taking historical data of a household budget,
Mhm.
saying I typically spend $100 a month on X. And what you're doing is you're taking data and putting that in and say, based off of the historical data that I typically spend on an amount, but that data has to be inputted.
Right.
So the input that Brandon uses is state and local data on trends from historical records on spending, not necessarily push a button, computer generates that information. What Brandon does is take actual factual data that's already been historically calculated and tabulated, and then measuring future impacts off of historical trends, not necessarily computing what may happen in the future. So it's basically taking actual records and establishing a trend based off of that record, if that makes any sense, as opposed to entering in data and
Creating something.
from space. So when he says it's an actual calculator, oftentimes when I sit down with Brandon to go over a BIP, we pull up spreadsheets. So he mentioned a NAICS code, very similar to a SOC code. So you're typical seeing a SOC. NAICS is more so to the business type. SOC are the jobs within that business type. So a NAICS code may have a categorization towards advanced manufacturer. SOC talks about the types of jobs within that company. So when we have those identifiers with NAICS codes, SOC codes, is basically taking a user profile of a person who works in an advanced manufacturing facility, who makes $60,000, who has 1 or 2 children, et cetera, how much money do they spend on groceries based off of state and regional data of a household data. So the same data that a grocery store would examine, sometimes we call that rooftop data. and where they would like to relocate to understand where their potential clients may be. It's the same data set that we pulled as well to understand consumer data.
My last question is, do you ever take into account the tax rate and in turn I don't know how to, the politics of government and who's in office and, you know, what party's in office and historically what they bring to the table when they're in office, whatever level?
So remember, we have that two-factor model. So basically, I'm able to program variables in at the MSA level and the county. So as far as like if it's going to be this president versus this president, I mean, those type of policies would actually need a larger, we'd need a US model as well to kind of overlap those effects. And a lot of that stuff could be measured. But then again, you need to tell the model very specifically what is gonna happen. And then like, this is gonna cause an X percentage change in this, and then feed it through the model to see the result. So that I typically don't do that. We use it for anything that I can kind of control at the local level, and especially for businesses. That's like I said, there has been certain times to where we've been able to use it for other things like the recession and such, because we knew what was going to be shut down and things like that. But as far as, you know, policies and things, typically I don't do anything with that.
Okay, thank you.
All right, Commissioner Durrell?
So let me just say, I want to thank Commissioner Altman for teeing up the conversation. It was fascinating. So thank you for the presentation. I have to candidly, I think as I was listening and I was trying to go through it myself, and it was a little hard for me to digest. But with your interpretation, it was a lot easier for me. But I have to say candidly that I think that my confidence has been shaken in the REMI model with respect to, I want to look at it from a different angle if we can, just for a second. What it doesn't tell me is it kind of, in my opinion, it gives us a warm and fuzzy picture of what is supposed to happen. But when I hear that, I've raised my hand a lot of times based on the information, what we can see, to a certain degree. This is a component that I look at when I am trying to evaluate some of these deals that have come before us. And what I heard in simplistic terms, we don't even know if we can go back and track to see what we said, if it held true. We don't know. And so that's my fault for never asking, you know, can we go back and see information on those previous deals and how closely did it align with the REMI model? So hopefully we can, but, and I understand there were inputs that certainly we can't control, but the other thing that I feel like in my mind that's missing, this is, and I'll candidly say this is a conflation on my part, but when you look at some of the things that we look at in the community, this doesn't tell me how it's going to impact disparities, right? So yeah, people that can participate in the economy, we can predict what car they'll get or that the price points and things of that nature, but those who can't, it doesn't show me how my decision impacts the wider disparities that we constantly see. And so, because we're always trying to drive back the needle, right? Why aren't we able to scale? Why is the disparity growing? When we're bringing in all these businesses, the disparity grows. We should get this much in revenue. So nonetheless, those are just some of my initial thoughts. But the main questions that I have with respect to the NAICS codes, do they automatically drive the inputs or do you guys have to manually put them in? is there a way to control for disparities?
So as far as measuring disparities, that is another RIMI model. That is, it could be added on, and it does that. As that one's one that they call a module add-on. It's called SEI, and it measures such thing as income quartiles and things like that, and how it could affect different people. These modules, though, I do know that they're very expensive to add in. I can find that information now. But yes, some places are using that. And there was a second part. I'm sorry. What
No,
was-
it's okay. The NAICS
NAICS
code,
codes.
when you input a NAICS code, does it just automatically drive the inputs? Or do we have to go in and?
Well,
put
so
everything in?
whenever I do that, is I'm generating an amount of employment to a NAICS code. And let's say any change in the compensation rate for that NAICS code now factored into that NAICS code, it already knows that if I say X amount of employees or whatever for that, and it's a new business, it's going to generate out a generic profile for it and be able to use those assumptions.
No, that's perfect. Thank you. Thank you.
Okay. Make one or two comments to Commissioner Durrell's inquiries or commentary. So one thing I just want to make sure we're transparent on or give the additional context. We use RIMI multi-prong, right? So, or any economic modeling tool is going to help us determine what could be the financial impact that's going to happen in our community. So as Brandon alluded to, we would have to have all of this detail, like, how can I best, I'll move this aside. It's not uncommon that we may make investments in a program. And there could be other factors that contribute to the output of that program or to the impact of the program. And sometimes it's very difficult to narrow down that this one thing affected the whole, right? So with that same vein, as it relates to business incentive grants and tax increment grants and all of the like, what we are able to go back to say is, one, did we get the projected revenue from the asset that was there, right? Did it return because of the capital investment, what we were expecting? So we're able to see the revenue from that, and we can narrow it down. Yes, we have this information, be it sales tax, profit revenue, we may be able to in the property tax. What we can't do, and it's really more about property tax, what we can't do is the part of, do we know that because of this, it induced more jobs because of this job? Now, what we could do is say, in the course of the year, did we see more jobs that spurred in our community? Did we see more economic cycling of money in our community? We could probably look at that data, but we can't just say it's because of this one thing, because at the same time, there could have been other jobs that were coming in or other businesses that were coming in that we could not control and say it was this one particular business that made this particular impact. But as Shar alluded to, there are mad scientists that are behind, economists and the like, that are looking at algorithms and making predictors to say, based on what they're seeing in our community, when you add this, it does that. And so the algorithms are what's behind the RIMI that we're paying the mad scientists to do on our behalf, to say, you have a high probability, if you do this, you'll get that. But there are very limited mechanisms that will allow us to do that, to determine, even if we bid the business, did CMS grow by 2 more students because we brought in this? We just cannot confirm that it's because of this. So.
I'm sorry, can I ask?
Yeah, of course.
Follow up. So when we're looking at it and you guys say, I think I've heard this in the presentations, it's predicted to induce X number of secondary jobs, right? Secondary employment, because a paper person, the ink guy has to hire and stuff like that. So the model is able to take that sort of thing into consideration, but what I'm hearing, there's no way for us to really go back and find that out. It's what it's really telling me is what it's supposed to do in all things being equal, it should
Correct.
give
And
me-
it's probably very limited tools that will allow you
Okay.
to get to the specifics of, because this business
Sure.
on the back end and do
Thank
it
you, sir.
otherwise. But it takes into account all the other, hypotheses and algorithms and things that people are saying. If you bring on a new business and it generally has X amount of employees, it has a high probability that it's going to expend X amount of dollars in paper, X amount of pens, X amount of blah, blah, blah. These are the variables that will be impacted. So it has all of that behind the scenes. Now, to your other inquiry, and Brandon referenced, when we did a comparison with, Reimagine Valentine, some of the numbers were pretty close to other algorithms that other tools that were being utilized. And that's probably the best proxy that we have. If you run something similarly and see, my apologies. If you can run things similarly and get similar results based on the algorithms that are behind it.
Commissioner Jarrell, if I may, I know that I'm maybe beating a dead horse, but I'll take the risk here. So, the algorithm says this, we're hiring 100 people and they're going to buy, each are going to buy X amount of cups of coffee. And as a result, that's going to induce 5 new baristas in our community. We can measure how much direct money they're bringing in through salaries, and we can measure their investment. And we do that through our business investment grant process. But what we cannot measure is, did that barista actually get hired in our community? So there's limitations in how far down the line that we are and are not able to measure.
Thank you. Thank you both.
Okay.
Yeah.
All right, I just wanted to say that I really appreciate how we've been getting those recordings of the meetings, and that's why I'm like, oh, we have to make sure we use not because we can't hear each other, but because it's being recorded. So I, like, Commissioner Durrell, I feel skeptical. Because it kind of reminds me of like trickle down economics, like, whoa, if you do this, this is supposed to happen, and then it's gonna trickle down and yada, yada. And then we kind of find out, oh, it doesn't really work. And so I do feel a little bit of skepticism because it seems very theoretical, and we can't like pull a string and go, okay, well, we can at least check this one thing, or we can check this other thing, Oh, sorry.
No, I had a comment. What we primarily base our economic impact on is real property tax increase and business personal property. That we can check, that we verify, that is factual.
Mhm.
So if a company tells us they're going to build $100 million facility in order to get a grant, we check the tax rolls. That is factual. That's a part of our everyday analysis.
Is that what this is though, or
Correct.
this is more than that? The graph?
The graph it takes into account the primary economic impact, which is business personal property tax increase and property tax increase.
Mhm.
So that's the premise, that's the foundation, that's the primary economic impact on how we do BIPs.
Right.
The secondary induced jobs, the extra tax, sales tax increase, those are estimates, right? Those are the things that we can't necessarily go back and check how many baristas, or did I buy new tires, or did I buy a new suit because I worked at a facility. But what we can check, and which actually comes into our bank account, is when we leverage our business investment program grant to bring in a corporation and they build a new facility or renovate, and they bring in extra workers that make a certain salary. That 100% we verify, that 100% is factual, and that 100% we can go back and track. So I just wanted to reassure you that some of these secondary economic impacts, such as consumer data, may be a little bit harder to track. But the primary premise behind what we do and how we vet companies is factual data that we have record of.
Mhm. So when we look at our graph, It's got revenue and expenses.
Right.
Correct.
That is something is solid.
That's out.
That
We
is
can always
out.
go back.
Solid.
Property
Okay,
tax. yeah.
total revenues, by the way, this is so tiny, I can barely read it. Total revenues is solid. That's a real thing.
Yes,
County expenses,
that's
is
a
that a
solid.
real thing?
It's a solid, but not, so here's, let me give you the other context with regards to this to some degree. And that's, and your answer to your question is it's gray, but I'm gonna get to you. When we embarked on this tool, the Economic Development Committee at that time was wanting to say, if I'm making a choice in a business investment grant and I'm choosing to give them X amount in incentive grants, how do I know, how long is it going to take for me to get that money back?
Mhm.
Which is the property tax analysis piece that we were talking about. So that was one of the first things they wanted to know. How long is it going to take for us to get that return back? The second thing they wanted to know is it going to have any impact to other things and services that we, so if we bring something here, are we going to then have to expend more money for things like schools or social services and the like? So they wanted to understand, can we get something to kind of give us a behind the envelope, better understanding? If we make this investment, is the investment going to put us in the red, or are we going to still stay in the black? And if we're in the black, being we're going to be net positive, how long does it take us to get there, and what does that look like? So that was the whole purpose of why we bought the tool. The tool, of course, has way more robust capacity that's behind the algorithms that inform that for the output that we provided, but it informs a whole lot of other things, which is that secondary market piece. But that secondary level of market analysis, that's what we can't validate. But the original reason why we acquired the tool was for them to have a better, instead of just saying, oh, this sounds good. Oh, yeah, we want to invest in it, 300 jobs. Can you give us a little bit more?
Mhm.
And that was the
Okay.
purpose.
And that's the part where we feel like we can stand on it
Correct.
and we can be pretty
Correct.
confident. Okay.
Yes.
That's super
I
helpful.
will add, if I may, Madam Chair, that we, almost all economic development models are based off the input-output method, which are included in Plan and REMI. And the Weldon Cooper Center at UVA advises government policy and applied research for informed decision-making across all government, federal, state, and local government. And they use this model so that the doctors who have choices and the mad scientists, they have picked these types of models as the best predictor of future outcomes. While we can't validate it, it's still used universally.
Okay.
And Susan, kind of dovetail on something you just
Sure.
said. Verifying what has occurred in Mecklenburg County, it sounds like, I mean, I know you do it contemporaneously, actually. You make sure those taxes come in, you make sure those people are employed at the level they were supposed to. So there has been, it sounds like, verification in real time for 2/3 of what piece of it would you say we definitely know and we've been verifying all along has been delivered as promised?
We haven't done a end of the year recap, but I think you probably remember last year, we did a recap on the 8 BIPs
Mhm.
that were approved, and everyone exceeded their job amount and investment amount. In some
Strong.
years,
Yeah.
in some years, people may fall off. So I'll give you an example. Centene, which they promised a certain amount of jobs and investment. They built that investment. They did not receive a BIP. They paid their taxes. We receive 100% of the taxes paid by that company. So that's just one example. Oftentimes companies will make the actual investment. The job component may be tricky depending on COVID, work from home policies and the like. So I don't have the actual data from this year. We're looking to do a recap at some point and reconvene and kind of give you a 2023 at a glance, specifically for business attraction, retention, and then do a recap on where we see trends going. But we wanted to couple that with some of the things we wanted to implement with 2.0 that you've heard of.
Mhm.
So a look back and then also a trend on where we're going in the future.
Mhm. Thank you. Okay, so pertaining to that going forward, the expensive models, modules that can speak to disparity. Can you, I'm interested, and I assume that some of my colleagues are interested to know what is expensive. And, I would be interested to know more about that, because as we've all been saying, that is the number one thing that, we want to do is close these disparities, right? So having we have interest in letting us know how much does that cost? How accurate is that? Who's been using that? Has there been studies? That would be really something for us to look forward to as a future item.
Sure, we can go and delve down a little deeper and try to be able to present information. And just like we did on the front end in 2014, when we presented this to the elected body at that time, we shared it with them in plan. We shared with them, there was another tool, I think it was called EMSI or something like that, as well as REMI. And we went through all of it and the pros and cons with the tool and so we can, look at that kind of approach, but let us do some fact finding and understanding of what is the REMI tool that gives you a little bit more capabilities with regards to equity, inclusion and the like.
Yeah.
And let us become a little bit more familiarized with what is the output, because if the output is still an algorithm and you have challenges with it.
Exactly.
So let us do a
Yeah.
little bit more research.
Yeah,
and
if
can
we
add
feel
it
like
as
it's
an agenda.
fuzzy, we don't need to like double down and get more fuzzy.
Right.
But if it's kind of a proven thing, and and there's some results from other communities, it surely would be great to know that. And so it sounds like it's been a decade since we originally, went down this road. And so maybe a decade later, it's time to maybe invest a little bit more and see what we can do. I did have another question, similar to Commissioner Durrell. I was wondering if does it get like loaded up by somebody else? Like, are we buying something where someone else is loading in all the data like every year? Like, is it every year it's being updated? Or every time you do a new project, do you have to like load everything in? Do you know what I mean?
So it does get updated. Most of the time it's like once to twice a year. As new data comes out, it needs to be published and then the historicals get updated to a new point from there.
So you're not the one that's doing that. You're the
I
one that's like
do-
sort of driving the thing, but somebody else is filling it.
Well, I do some things. I do some adjustments, like if like for population and stuff, I will use the state demographer's number and I will tailor that initial baseline forecast to those and then just kind of do some truing up from there.
Okay.
And as for the other pieces, those are done by REMI. So and what I mean by that is like for these industries, it shows kind of what they spend and stuff like that. So this is, this program is not a black box. There's published data out there. It's been well studied on what these industries spend. So if I program in, back to paper, I'm stuck on paper mills today. So a paper mill, we know what those companies spend. There's hundreds of them out there. They've looked through them. They say on average, this is what it is. We know what people spend because there's been studies done by that on the census. That's proven. I've looked at it. I'm not much different than the average person. So it's taking all these well-studied bits of data and it's plugging them together to move like they should within the economy.
Right.
Yeah.
Okay. So would you say it's sort of tailored, like you're tailoring it for us, like you're getting all this information that's maybe national and then you're tailoring it to our local?
Yes.
And so does that mean that cost of living and things like that are different around the country you're sort of tailoring it for us?
Yes. Yes. And a lot of the variables that come just, standard to the model, like because they customize it to our area as well.
Oh, they do. Okay.
Yes. And then I go in and do further modifications from there, but
Okay.
yeah, so we're trying to get it as specific as possible.
Okay. And then I think the picture is bad, garbage in, garbage out, because I get the funny, connotation, but then in the picture, the next picture, you're putting garbage in. And then you're coming out with money or gold bars or something. It's like, okay, so maybe it's not garbage that's going in. That's the second model. Like, you know what I mean? That kind of makes you kind of lose a little confidence in it when you think they're putting garbage in there. Like, let's put some data in there, not garbage. And then I just wanted to double check on something about the little video. So I wrote this down and I'm not sure if it was correct. So primary businesses are the focus here of economic development or of BIPs and then you said consumptive businesses are not. So are you saying that our focus as a county is less on the consumptive businesses and more in the primary businesses?
Our business attraction and retention is focused on bringing in
Okay.
primary businesses. And I'll also say many communities call them traded sector businesses, those that sell internationally and bring the money back to the United States would be synonymous with the use of the word primary businesses. And that's,
Okay.
but I also want to mention to you that we also try to diversify the economy so that, we're not we're resilient. We're not just on banking only, for example. We want to prevent ourselves from being the Rust Belt. So when Shaw and others bring you something like Feast, for example, and I'm just not going to talk about that here, that's not necessarily a primary investment, but it is a diversification of our economy for a lot of reasons. We think it's a good idea to encourage that to come here.
Okay, so we are working with consumptive businesses as well, but we're just not using our incentives and retention grants
For
those.
lawyers or movie theaters and the like.
Right. Okay, but we still care about them.
We care about them.
And
We
then
help
we
grow
want to
those
attract-
businesses.
Right.
We provide
Okay.
business launch pad and other types of support.
Okay. And I feel like we're running out of time, but there was one more thing that you said that I really was wondering. I wanted to know if you could talk just a little bit more about the impact of whether there are linked businesses. You said that if there are something about linked businesses, and this was on slide 6. And I was like, what do you mean by that exactly?
Let's go back to that slide. I'm trying to.
This really is fascinating and I
Oh,
appreciate the
yes.
conversation.
So supply chain, right?
Yeah,
For the business. So whenever we add in a new business, it looks at those linkages of what that business needs to run and where it needs to get those goods from. There's tables that are produced called the regional purchase coefficients, and it shows what proportion of goods comes from elsewhere versus in the county.
so if we're manufacturing something, let's say it's cars, the electric vehicles, if there's not a whole lot of linked businesses that are supplying us with those, that means that with the parts, that means that we're not getting as much in our economy. But if we had a paper mill in our economy and we had the other linked businesses for the paper mill, then we would be getting more than the car business.
Yeah, exactly.
Okay.
So that's why that's another good thing that the model does, is that it kind of does that check for us. And then it looks at those, if our local economy can really support this business or not.
Okay.
Because sometimes we run these things, and I've done it in the past, and it's like, why would anyone want to bring that here? Because it's just not going to work well. And, we don't supply it. So, it could be the case that they're just shopping around to get a different city to offer them something so they can go to their primary place.
Okay. All right. Thank you. I think is that everyone's pretty good. That was a great discussion. I really appreciate the insight into all of this. Appreciate your time being here and everybody's, input has just been really great. So I hope, Commissioner Altman, if you had any further, hopefully that answered pretty much all we were asking. So now I believe we need a motion to go into closed session.
So moved.
All right, all those in favor? Aye. All right, so aye. So motion made by Commissioner Altman, seconded by Commissioner Durrell. And so we'll go into closed session. Motion made by Commissioner Durrell to go out of closed session and seconded by Commissioner Meyer. All those in favor, say aye. Aye.
Madam Chair, I've got one question.
Oh, sure.
This is a quick, can we go, I want to go back to the Remy model just really quickly. When we're being competitive with other communities, obviously, We just talked about that, so sorry. When we're being competitive with other communities, can we run the model? Brandon just said something I thought that was really powerful. He looks at it and then he says, why would they want to bring that here?
Mhm.
Can we run that model to say, okay, we're competing against Austin with that community and look at it and say, they're bluffing.
Oh,
They're
that's
bluffing
interesting.
Austin. There's no, based on what the model is telling us, that would be a bad mistake for them to go there.
No, we can, with the question, if the question is, can we see if it's a bad decision for them to come here? We can do that. We cannot do, is it a bad decision to go elsewhere? Because you're buying the data from Mecklenburg County,
I
not
got
other.
you. Okay.
geographies.
Yeah,
That makes
So,
sense.
but we can run, to Leslie's point, though,
yeah.
we can see what Brandon was saying, obviously, and does he give us that information, I guess is what I'm saying, because he says he looked at.
We look at a lot of different data to look at the competitiveness. The first one is talent. That's typically the first opportunity that we look at to see if there's a bluff or not. If you're moving to nowhere USA, and there's no disrespect to a different community, but if your total population is 500 and the mayor is also the deputy, and you're looking to do a 10,000 worker facility, that doesn't pass the sniff test. And then we also look at incentives on competitiveness and then supply chain as well, to Brandon's point. Do you have other aspects of the economy that can support that? Transportation, schools, roads, and then another aspect of this is energy. So oftentimes manufacturing facilities or other companies are huge energy demand. We look at infrastructure as well. So those are just some aspects of what we do and check out competitiveness. And that's a part of, we also leverage the Charlotte Regional Business Alliance as another tool for research in regards to comparing different markets. That's a part of their competitive advantage as well, is selling the Charlotte region and understanding our competitors in other marketplaces and measuring the data in regards to infrastructure, school systems, housing costs, GDP, average salaries and wages and alike. So yeah, we do that. We try not to play dirty with that data, but we definitely leverage our assets as opposed to highlight the negatives in other communities.
Thank you.
All right.
Motion to adjourn?
Yes. Do I hear a second? Okay, motion made by Commissioner Altman, seconded by Commissioner Durrell. All those in favor, say aye. Aye. That is unanimous. We are adjourned.